There's a lot of talk about central bank digital currencies and how they could be the future of money. But what exactly are they?
CBDC is like the constant note, but it takes a digital end-to-end form. It's issued by the central bank. It's fully backed up by the government. It is also a legal tender, meaning that everyone can transact using the digital currency, just like constant note.
So CBDCs are a new form of digital currency. How are they different from crypto?
Fundamentally, they're all digital currencies using the underlying distributed ledger technology or blockchain to operate. That is where their commonality essentially exists, and that is where it essentially ends. CBDCs are centrally managed and are a direct liability of a central bank.
The legal status is different. It's regulated for sure, but the other cryptocurrencies that we see in the past few years, many of them, they are not regulated.
While cryptocurrencies can be used as a form of payment, but because their price volatility is so high, essentially what you may transact today, the value may be completely different tomorrow or the day after, and therefore they're an inconvenient form of payment. However, it does happen in a peer-to-peer manner. CBDCs would be essentially a very stable form of payment because the central bank is ensuring that there is complete stability.
How are CBDCs different from transferring money on my banking app or paying for things with my phone?
You're using a fundamentally different payment rail, which is a brand new payment rail based on distributed ledger technology that in essence brings a lot of efficiencies that we are now exploring to see how those efficiencies can translate into benefits to consumers and merchants alike who would be using this.
So CBDCs should have a faster and more efficient payment rail, which is the technical infrastructure that settles digital payment transfers, and that could make transactions cheaper. What else could they potentially do?
Programmable money is an interesting concept because we're trying to explore whether you can apply that to different types of use cases, including fraud. Programmable money allows us to issue money, transfer, or make that money used only under specified terms and conditions. So theoretically, what we can do is make sure that that money is not being transferred or used until certain products or services have benefited the consumer.
What sort of issues surrounding CBDCs need to be ironed out before we see them being widely rolled out?
Instantaneous cross-border transaction will be the ultimate goal. But there are still technical challenges to overcome. One is throughput. Just imagine that you have millions of customers using CBDC, and that could be tens of thousands transactions every second. So achieving this throughput still is a question that needs to be resolved. We have a separate team of researchers looking into the trade-off, for example, throughput, data piracy, security, and look at the different combinations of design factors and try to come up with some analysis and maybe recommendations to the regulator how to go forward.
In terms of partnerships, HSBC and the Hong Kong University of Science and Technology are working together to study future fintech, including CBDCs. How does this partnership work?
It provides us with access to research and research facilities. We have 4 significant laboratories running on CBDCs, quantum computing, fraud mitigation, and credit modeling as examples. And the lens there is different because we have our own analytics communities, but they have researchers that are on the leading edge of these kinds of things.
HSBC also engaged its own staff, experts in working with us on CBDC, in particular in the area of technical research. We gain a lot from HSBC, from their experience and also their perspective.
It's extremely important for us to have a good academic connectivity with innovation, thought leadership outside of the walls of our own bank. So it's really critical for us to have that connection.